Hello everyone, hope you have a great weekend. This is Sam Wong again from Finance and Analytics Services team. Last week office the market wasn't doing so well. As you can see, the graph of this Dow Jones Industrial Average in 5 days is actually down 1.77%. The market was actually have a really rough last week, particularly on Thursday and Friday, primarily driven by the Ukraine-Russian tension. Why I think the market was bad, the oil had actually been even higher, have even more higher volatility due to the news. You swing it, with U.S. saying the Russian trip will be invading at any moment. I mean, right now, if for those of you who listen to my video, knowing that, I mean, the Beijing Winter Olympics actually fell at the end of closing yesterday. So it really during the time I promised, it didn't have anything happen. So you potentially now after this is over, you could be really at any moment the rush will begin. So it wasn't doing very well. Dow Jones was down 1.77% last week. You can see on the graph, and also actually it's down 0.54 in a month. So yeah, so because the last week wasn't doing well, so you drag it down. Otherwise it will be actually positive in a month for Dow Jones Industrial Average and the Nasdaq. Um, you actually see that was beaten up pretty bad too. Friday alone was down 1.23%, and you pulled back 1.6% last week. S&P 500 was down 1.4% in a week itself, but 1.12 in a month. So that's another one giving you the pause spread of actually down as well. So all the major index were down last week, and also the futures right now. When I look at them, all three major index also down, which down 1 to 2%. So it depends on because you really have the volatility as well in the market that started in Asia. And then the moment Euro pick it up as well. So give you a quick recap. Last Monday in Europe, travel shares, which require economic calm to attract customer, led the stock 600 lower. Ben also underperformed, probably due to profit taking after Wally on expectation of monetary policy. Japan's Nikkei 225 fell 2.2%, underperforming the region. The index was led lower by transportation equipment, rubber, and non-metal mineral sector, which underperformed. U.S. stocks are not seen lower opening Monday on fear that Russia is set to invade Ukraine, potential result in severe sanctions which could disrupt the global economy from the pandemic. The S&P 500 fell a third straight session led by losses for energy stock, even as oil price during the day surged to $95 a barrel for the first time since 2014. In Europe, the S&P fell on Wednesday. The market was still pretty volatile on Tuesday, and then quick snapshot on Wednesday. Market sleep as well on the net. Nvidia reported earnings yet to meet investor expectations despite very strong earnings. Nvidia's dropped 6% after market continued to challenge Thursday. QuadOption plunged 17.92%. Lithium producer forecast down beat annual earnings. JP Morgan Chase, Morgan Stanley, Bank of America also lost ground. Goldman Sachs, Wells Fargo fell even after positive outlook from the lender. However, Walmart actually pushed stronger than expected, earnings driving 4% higher. Roku earnings top views Thursday night, but also the stock was still down. Apple stock fell 2.1% to 168.88 on Thursday, just below 50-day line. DraftKings stock fell 14% after reporting projected larger than expected full-time loss. Stock some 25% after video streaming device market quality revenue disappointed. So DraftKings got a big hit. DualPoint stock rose 3.3%. And Fastly stock rose 2.6%, responded from after cloud company lost a third of its value in previous session. So the stock Fastly after announced earnings actually got down to $28, the lowest, which was really got a really bad beating up. If you look at the 52-week chart, they will have $100 plus. So a lot of these high-tech stock, which is growth stock in particular, actually lost their value. Like I said, for those who hear my video, it already gone down to 20% from the 52-week high as a peak to do the measurement. So, I mean, unless they win bankruptcy, I was saying, hey, you probably will come back and it's worth to, take a shot, take a risk to buy in a moment, but you can't expect to get a return right away. But hopefully you pick a right choice out of those beat up growth stock and just have to watch for probably a few months to a year. Shake Shack stock fell 14% after a bigger burger chain forecast first quarter revenue below expectation. WTIS slightly above $90 per barrel. Gold was slightly under 1900, and Bitcoin rebounded, but then fell back to slightly lower than $40,000 per Bitcoin for end of the week. And if you look at the graph, and which is this one, just want to share with you from a technical perspective, S&P 500 has been down 2.92% in 6 months, and Nasdaq Composite is still technically within recent range, but closed their worst level since late January. The S&P 500 index once again closed below low of its January 31st follow-through day, and a bearish signal. The S&P 500 bouncing back about the 200-day line, and all the major index reclaiming 21-day line will be small. Moving decisively about the February high, which would coincide with the S&P 500 50-day line, would be a stronger signal. So we have to look at hopefully with the see coming week we'll have a rebound, then you're coming back to a 50-day line average as a test to push it higher. But you've seen it before. They're trying 3 days straight gains rebounding, but then trying to high actually hit lower. So right now you can see the graph apparently you were trying up and then you hit back down again. So we may have an overheat resistance, especially healthy growth Nasdaq. So if you have some winning stock, you may want to at least take some partial profit at this point to make the trade still end up positive, because we never know what's happened with Ukraine or Russia, and it's already past the Olympics. So at any moment that the war may be going on, then it will drag the market down further, but it potentially make the US dollar strong and also go up. So normally when there's war, that historically speaking, the gold will actually become a good tool to hedge, and people will buy gold instead of dollars. I mean, some also holding dollars, so it depends which country. While most of the people not looking good at the market, there are two analysts still think the market will end up higher this year. Fear about recession overblown. U.S. stocks should rally 20% from current level by end of year, according to Brian Bielanski of BMO Capital Market. An investment chief for BNY Mellon Wealth Management break down why he's expecting stock to spread by 8 to 10% this year despite recent volatility. And if you have lost less than 20%, you may also consider selling some of them. Just take the realized losses and keep the cash. Cash is the king, so you get a chance when the market dip further. Also you can do put option now to kind of option hedging your physical position. Normally I wouldn't recommend it, but because right now the market could continue to go further down. I'm still betting on the travel stock and think the summer or next year will be up. So I mean, if you see the last week actually the CCL, NCLH, and United Airlines did kind of rebound up quite a bit, 3 to 5%. But of course, with the overall market not performing well at the moment, everything was dragging down again. So you see they did back down again. But for long run, if you will hold on to this, still looking at really, to me, that's still a good investment on those. And then bowling and Disney, still a good one in my mind. And then DT, the breakdance, which is a cloud business, is also a good one. Apple is always a good one to hold for long term. So I just want to give you some stock that's still worth to hold. HYLN, they're going to announce earnings on February 24th. So I will actually, depending on what position you're buying it, you may consider selling it before the announcements, because if they didn't do well and miss, just like Roku and DraftKings, I mean, the stock could have actually gone down by 20% or more. Right now, current level of close to $4 a share right now. And some other stock that, high tech, like I said, Apple will be a stronger one. Netflix, if you see thinking there will be, another good movie or series that actually ongoing that can drag more subscribers, that could be a potential one. Still hold short. Amazon, I mean, for the one that's going to do the stock split eventually, you probably still have some momentum to push it up. But for long run, these will be a good one, and then the travel stock, and and then maybe the the green energy, the green stock like TES Tesla will have dragged down now $850 lower. You can consider thinking through if it drop another 10%, which is below $800. It's definitely good to hold for a long time. And XPEV same pain as well, which could potentially will drag. But again, if you look at a long-term perspective at this point, even you see it's actually losing ground, don't get too worried about it. Stock, as you can see in the past, with the last 3 times that when the market have a correction, it always bounce back 6 months later after, when the market getting very bearish, to start to have a signal rebounding, and you'll take about a year or so to get out of it. So for a long-term investor, you're looking 3 years down the road, and you still be, it's probably still higher than the point you're buying right now. So have a nice, wonderful week. Hope things will go well, and we will have another exciting news to share with you. But right now, let's see what happened to that Russia-Ukraine tension, and hopefully again world peace, and everybody will be better off this year than last year, as we have experienced a pandemic now over 2 years. Thank you.